What's going on, guys, and welcome back to another video. So on Monday we made out a full plan for 2022 ranging from crypto to real estate to growth stocks all the way to dividend stocks, and how I plan on getting to €1 million net worth in 5 years. And in the comment section below within that video it was suggested that I'd go into detail in each of these 8 investment vehicles. So in today's video we'll start it off with my dividend portfolio. We look at what stocks I currently have within the portfolio and go through sector by sector basis here as well to see what I have within each. We'll then look at the current performance and also my plans going forward for my dividend portfolio. So with all that being said, let's get straight on into today's video. So here we are on Trading212. We kicked off this portfolio last week and we only have about just under €600 at this moment in time, or 592. We're already up over 4.1%, which I'm very happy with considering the time frame we have been investing and that they're fairly safe stocks. Now overall we have 50 stocks spread across all 11 different sectors within the market. So today we're going to go through each sector individually to see what stocks or what dividend stocks I have within each of these sectors. Now going forward I will be putting a lot more capital within this investment vehicle. Again, we only have 600 at the moment. I do plan on having minimum €5,000 invested within this portfolio this year, and then kind of sprinkling out the other capital within my growth portfolio, crypto, real estate, etc., which we'll discuss in other videos down the line as well. Now again, if you missed Monday's video, I'll put it in the description below as well if you want some recap here. But again, today is all about the dividend portfolio. Now going forward, my kind of process of investing here will be dollar cost averaging. Similarly, what I did to last year's portfolio, which we made about 25% profit overall, or €2,500. So again, if you're kind of new to dollar cost averaging, that's effectively buying the dip as such. So let's say you have €100 worth of Coca-Cola, it goes down to €90, then you want to buy another share at that price. Now your current average price will be €95 in comparison to 100. So again, your overall average cost is cheaper. So once the stock does bounce back, especially blue chip stocks, you're getting a bigger profit overall. It's kind of a simplistic overall review of that. So that's what I'm going to be doing at the moment. And again, we kind of discuss that throughout the video as we go through each sector. Now, as mentioned as well, we have 50 stocks overall spread across all 11 sectors, and kind of 2 reasons why I use Trading212 for this in portfolio is kind of firstly, you can group your sectors into different sectors on the left here in terms of portfolio pies. So I'm quite happy there because again, as you can imagine, having 50 stocks can be quite hard to keep up with. So I much prefer to put them into pie features here so we can see how each sector is performing, as different sectors react differently to different market conditions as well, and it's a lot easier to see where we can dollar cost average as well. Now the second reason is because you can buy fractional shares. Now as you can imagine, starting off with a small amount of capital, it would be very difficult to buy 50 full shares of any stocks, especially with the likes of Tesla or Amazon in your portfolio. It would be very hard for a normal average investor. So that's very handy here as well, and particularly with dollar cost averaging, you won't need to buy full shares. You can put in any extra cash you have when some of the stocks go down. That's kind of 2 of the main reasons why I use Trading212. Now we can start looking through each of these portfolio pies on the left here in terms of sectors to see what stocks I currently have within each of these pies and also how they're performing in comparison to one another. So when starting off this portfolio, as we had 50 stocks overall, I only wanted to put a small amount of capital into each to kick it off, and we put about €10 or so into each of these 50 stocks, again, which shows the importance of buying, the ability to buy fractional shares. Now again, for each sector, I didn't want to have the same amount of shares depending on what sector was. For example, here we can see the first sector up here is communication services, where we currently have 4 stocks overall, and that's my cap on the number of stocks I want within this sector. Now, admittedly, it was quite difficult to find some decent communication services stocks. I find it very hard to find a 5th one if I'm being honest here. Now, we can see we have 4 currently, and the first one of the 50 is the only one of the stocks that currently do not pay a dividend, and that is Walt Disney. Now, we all kind of know why they stopped paying their dividend. But again, down the line, I do believe they will continue to repay a dividend going forward. So that's why I want to have it here and start building up a stock price or stock allocation here for this sector or this company. And hopefully down the line, it will reap its rewards once it starts paying a dividend again. So we have Walt Disney, AT&T, Verizon and Omnicom Group of the 4 communication services stocks that I currently have. And again, I don't want to add any further stocks within this pie. If anything, I'd be removing one. But for now, I'm quite happy with these 4. We can see they're all in the green, and currently this sector is up 6.28%. Again, I'm quite pleased with this outcome. The second sector here will be consumer discretionary, where we have 5 stocks overall, and we're currently up about 1.75%, which again is green nonetheless. Now we have 5 stocks here, ranging from McDonald's to Genuine Parts, Target, Starbucks, and Snap-on. 4 of the 5 are currently in the green, with the exception of Target, which is currently down 2.3%. So, as an example here, going forward in terms of dollar cost averaging, I am going to set up a rule where I won't be investing further into any of my 50 stocks unless they are in the red over 3%. Now, obviously, it's only down 2.3 to 1, but if it did jump over the 3% mark here, I would consider buying more. Again, over time, patience will be key here in terms of dollar cost averaging. And definitely when the markets do bounce back again after the dip, it will certainly reap its rewards in terms of getting bigger profit because your overall average cost will be cheaper. Now, just on that point as well, I have 50 stocks overall, and again, there's no magical number here in terms of how many stocks is best for an individual. It definitely depends on your own investment goals. Now, the reason I want 50 is mainly because of dollar cost averaging and to have an overall exposure in the market. Some people might think 50 is too much and others might think it's too little. So again, a lot of people might have 100 stocks, whereas others might only have 10. But again, this is where my own personal investing, I think seems fit at the moment to have 50. And who knows, down the line we might put that down to 40 or even 60. We'll see as the investing journey goes on. Now, again, the main reason why I have 50 personally, again, is to have an overall diversification across the market. We can see on the left here we have all 11 sectors, and the other is the dollar cost average. So over time, I'll start to put some more capital into this portfolio as free funds and take advantage with any of my stocks drop below 3%. So again, that's the overall purpose here. Now, again, in consumer staples, we have 5 stocks here. Again, my cap in terms of how many stocks I want. We're up about 5.67%, which again is quite good considering these are all safe blue chip companies. We're ranging from Coca-Cola to PepsiCo, P&G, Walmart, and Unilever. So again, prior to making this overall portfolio, I did do a lot of research. And again, the likes of consumer staples and consumer discretionary were very easy to find 5 quality stocks in comparison to, let's say, communication services. Following on from that, we have my energy sector pie. We're up about 4.69%. Again, quite happy with this performance. We have the kind of two older school style stocks here in the form of ExxonMobil and Chevron, both in the green. Notably, ExxonMobil is up 9.4% already over the last week or so, so very happy with that performance. And we have BP and Royal Dutch Shell as well. Now, again, in this example, we wouldn't be buying anything further because they're all fairly in the green at the moment. So again, it's just the whole overall patience here of building up a cash reserve and taking advantage when they do drop. Now, kind of strangely enough, I would have preferred if all 50 of these stocks straight away dipped after I bought them because we'd be able to get in a cheaper price. But again, we'll just build up a cash reserve here and buy when the time is right. So that's kind of 4 stocks we have at the moment. Now, I did want to add some kind of clean energy stocks here. If you remember my old portfolio with the iShares Global Clean Energy ETF, but again, a lot of these clean energy stocks do not pay a dividend at this moment in time, mainly because they're kind of growth stocks. So I probably will add some form of clean energy into my growth portfolio. We'll probably make a video on that portfolio, maybe Friday or Saturday. But for now, in terms of dividends, these are the 4 we went with, and I'm quite happy with the picks. So when it comes to dividend stocks, particularly blue chip ones, it's very easy to find them in the financial sector. And if anything, I had a headache in terms of cutting it down and not adding up these stocks. So again, it's a very easy sector to find quality, safe dividend stocks in. Now again, a lot of these stocks, you won't be a millionaire overnight, but again, slow, consistent growth in these stocks and within the sector will really pay off over time. Now we're up about 2.93% within the sector already. Now, again, it's very interesting to see already how each of these sectors after 1 week are performing differently. For example, communication services is up over 6% in comparison to consumer discretionary, up 1.7%. So it just shows sectors act differently to different market conditions. Now, again, for these financial stocks, all 5 are currently in the green. Very happy here. And the 5 we went with are JP Morgan and Chase. Bank of Montreal, again, this was suggested by a number of subscribers, so thanks for that. Bank of America, Citigroup, and Goldman Sachs. Now, I kind of stated I could have easily put another 5 to 10 quality financial dividend stocks in here, but these are the 5 we went with. We still have 6 different sectors to go. The first of these will be healthcare, again up fairly well already, considering it's only about 10 days old at this stage, up 6.7%. Now, all 5 stocks here are in the green, very happy as well. Johnson & Johnson, AbbVie, Pfizer, Cardin Health, and Abbott Laboratories. Now, similarly enough, the financials, albeit not probably as much, it was quite easy if I could find another 3 to 4 fairly substantial or quality healthcare dividend stocks. But again, we have to have a cap here as well. Now, it's worth mentioning, down the line, I am currently in the process of making a dividend portfolio tracker on Google Sheets, which I'll share with you guys once it's created properly and I'm happy with it. especially when you have over 50 stocks. It's quite kind of hard to keep on top of them all, so that's why I am going to be putting them on there. And kind of the main importance of there is to show that I won't be over or underweighted within any particular asset or sector. Now that will be important here, especially once these start to dip. For example, if all these stocks started to go into the red and I bought a lot more, now obviously I'd have way too much of my overall capital invested within a sector, so I do want to kind of have them averaged out. Now we have 11 sectors overall, so again probably 8%-ish on a complete guess I want to have in each of these sectors. So again, that would be very good to track it accordingly. But again, that's where we're at with the healthcare pie. Very happy at the moment, but kind of unfortunately it probably will be a bit of time before any of these go back into the red already, which again I suppose isn't a bad thing. But I will be building up a cash reserve here and probably start to focus more on my growth portfolio and crypto portfolios over the coming weeks if these dividend portfolio stocks continue to go up. Our industrial pie is up next, where we have 4 stocks and up about 3.1%. 3M, Caterpillar, Waste Management and Lockheed Martin are the 4. Now the top one here, 3M, and the third, Waste Management, are currently in the red, albeit only 0.3 and 0.9%. So maybe over the next few days or even weeks, I'll kind of closely monitor this. And again, if it does drop below the 3% threshold, I will buy further. Now, again, in all honesty, just like communication services, it was quite difficult to find 4. Now, the top kind of 2 or 3 were easy enough to find. But again, Lockheed Martin, after doing some further research, I actually quite like this company. It's already up 5.3%. Now, admittedly, I didn't know a whole lot about this stock prior to buying. So after doing some research, I was quite happy with the fundamentals and their plans going forward. And certainly it's at the reaping its rewards, although we only have €10 invested, but it's still up 5.3% nonetheless. So now we still have materials, real estate, technology and utilities still to go through, which definitely shows the importance of putting all your stocks into different pie features, especially when you have about 50 stocks overall. Probably the 2 sectors where I'll be putting the least amount of capital in will be firstly materials and then utilities. Again, probably the main reason here is because I don't know a whole lot within these sectors, admittedly, as well. And again, I much prefer to have my money in the likes of consumer discretionary or consumer staples, especially or tech, in comparison to these 2 sectors. Now let's start off with materials. It's currently up at 1.5%, so it's in the green nonetheless. Now the 4 stocks here, admittedly as well, it was quite difficult to find 4 quality material dividend stocks. Again, I'd probably struggle to find a 5th, but again, I'm quite happy with what we came up with, and I won't be putting a whole lot of capital within this sector. Now, at the moment, we have Air Products and Chemicals, Ecolab, International Paper, and Packaging of America. So again, we're going to just keep it at this and kind of put probably a very small amount of capital in, but I did want to have exposure within materials nonetheless. Now, one of the pies we actually have a lot of interest and I'm quite excited for is my real estate pie, along with technology are my 2 favourite sectors to invest in. Now at this moment in time we're about 4.5% within this pie and we have 5 real estate stocks overall. Now again, it was quite hard to find or to even break down what stocks I want to invest in here because there's quite a few real estate stocks I'm excited with, but again, that's the importance of having a cap. So I want to have 5 stocks overall within this pie and we have all 5 here at the moment. All 5 are currently in the green. We have the kind of well-known Realty Income, we have Stag Industrial, Welltower, Essex Property Trust and National Realty Properties. Now some of these, unlike the average kind of dividend stocks that pay quarterly, some of these such as Realty Income pay a monthly dividend, which again doesn't necessarily mean you make more money, but again it's nice to see the dividend flow in a bit more frequently. Now again, another reason why I have 50 stocks overall is because it's literally like 50 paychecks or even probably 100 or so, especially when you break it down in terms of how they pay in terms of monthly, quarterly, semi-annually or annually, etc. So again, it seems to be every time I open my Trading212 app, there's a new dividend payment. So again, over time, once we definitely start pumping up this overall capital, the dividends will start getting a lot bigger. And it'll certainly be nice to see the dividend payments increasing over time, and particularly we'll probably be getting paid on a daily basis considering how many stocks we actually have. But for now, I'm quite happy with all 5 of these real estate stocks, and that just leaves us with technology and utilities. For technology, we have 5 stocks overall and up 5.5%, which I'm very happy with here, considering 2 are currently in the red. So again, they're only down about 1.3% each, so if they do drop below 3, we'll start definitely buying more. Now we have Microsoft, IBM, Intel, Cisco Systems and Accenture. Now obviously there's a lot of technology stocks I'm very interested in, but most of these would fall in the growth stock bracket, which again we have already bought into in my growth pie, which our growth portfolio, which we'll have a look at on Friday on eToro. But for now we have 5 here, and to be honest, even though Microsoft does pay a dividend, that could still fit in the growth portfolio as well. So I'm kind of up in arms in terms of if I'll add this stock into my growth portfolio as well, Microsoft. But again, we'll see over time. We currently have 5 stocks in my growth portfolio, and I'll have a further 5 by Friday, which would put my 10 stock cap within that portfolio. Again, we'll discuss that on Friday. But again, it was quite hard to find 5 dividend stocks in tech, considering they are like predominantly kind of growth stocks, so they don't really pay that much of a dividend. But again, I want to definitely have exposure within technology in this dividend portfolio. And our final pie of the 11 will be in utilities, where we're up about 2.35%, and we have 4 stocks overall here. Now, just like materials, I don't have a whole lot of interest within the sector, but again, I just want to have exposure. Nonetheless, we'll be probably putting tiny amounts of capital in here in comparison to, let's say, consumer discretionary or technology. Now, we have 4 stocks. 3 are currently in the green, and the other one's at parity. The one that's currently at break even is Next Era Energy, and the 3 in the green are Duke Energy, Consolidated Edison, and American Waterworks. So that's kind of where we're at with that portfolio pie. Now, that's pretty much all of the 11 sectors at this moment in time. Again, we only have just under 600 euro invested, so we're really at the beginning of this portfolio. Again, over time, as we try to get to that 1 million net worth within the 5 years, I do want to have my dividend portfolio at a minimum, and a very minimum that is of 100,000 euro. So we're obviously a hell of a lot away from that, but you have to start somewhere, and I'm really looking forward to documenting our journey the whole way as we try to make this dream possible. So again, I hope you enjoyed today's video. On Friday, we'll make a growth and kind of crypto portfolio update. If you have any questions, please don't hesitate to comment below, and I hope you all enjoy your Wednesday. Thanks very much, and I will see you all in Friday's video.